Private payrolls fell by 32% in November when most economists expected gains.
Yeah.
So that's been a red flag.
I know. Well, of course, everything got disrupted with the shutdown. What does that mean? That means that a lot of the Bureau of Labor Statistics and all that kind of stuff, that was government, those all got shut down. Now those reports are kind of back up. They're firing back up, and they've had to turn to these other kinds of things. This is a really interesting report.
Yeah, I wonder if this ADP, which obviously for those that don't know, they're a payroll provider.
The biggest in the U.S.
Yeah, the biggest in the U.S. And so I kind of wonder if their data maybe is more accurate since they're really on the ground.
It is interesting, right? Like we looked at using ADP, and we have in the past. I mean, ADP would know. I mean, ADP basically is an outsourced payroll service that has millions of people on it, right? Yeah. So they're watching this data. It's just like you guys know I like to watch U-Haul and Ryder Truck and those kinds of things and see where are people moving. It's the same kind of stuff. These are cool little ways to pay attention to industry.
And they were way off because economists thought it was going to be plus 40,000 and they were negative 32,000. So they really were off 72,000 jobs.
An economist was off?
Yeah,
what? Like what? By the way, economists.
Well, and I think what's interesting about this data as well is it was mostly small businesses under 50 employees that had a large share of the losses, where your medium to large firms saw less of a negative impact and some even added jobs.
Yeah, that doesn't surprise me at all, right? Mm-hmm. You think about that's middle America right there, right? These are people that are on the front line every single day. And by the way, they just went through wage growth hell, right? Well, that is a fact. Like the employees had the upper hand, which is okay. It happens, but now it's swinging the other way. And so when labor costs go up, when the cost of goods go up, and then people can buy on the internet and have something delivered to their door immediately, things change, behaviors change, habits change. And so we're starting to see the repricing.
Yeah, and we're also starting to see this K-shaped economy that we talked about on our live on Monday, where you have one sector of the economy doing really well and the other sector struggling. There's not really much of a middle class right now. And you're seeing that in the industry breakdown, right? So Trump's not going to like hearing this, but a lot of the cuts appeared in, manufacturing, professional services, construction, where a lot of the strength remains in hospitality, healthcare, and leisure. So you see what that top end of the K is spending money on, and those industries are doing well. And then those other industries like manufacturing, like construction, because of these high interest rates and tariffs, they're not doing so well.
Yeah, and we're seeing it in our apartments, right? Like one of the things that I'm looking at for next year is the delinquency rate. We have 10,000 tenants. I was looking at that today. Actually, it's creeping up a little bit, right? People are a little bit strapped. On the good news, the tenants that live in our properties, they also have more choices. So rents are flat. They have lots of options right now, but that's going to change pretty soon. And what I still am having a tough time wrapping my head around is the people on the K side of the equation. Like, how is it? Because it's confusing as to where to put your money right now, mm-hmm. right? So how is it when we see these people buying all this new stuff? These restaurants are packed. The high end, that call it the K part that's rising up, where the heck are these people getting all their money?
Well, I think they're getting it from a couple of things. I think one, if they have a super low mortgage or a paid off home, they have a lot of extra income. And then, if they've done well in the crypto market and they've done well in the stock market and they've done well in their real estate market, then they also have extra income. So I think that's kind of where it's coming from. To be able to spend that money on something. Because when we go to a restaurant, it's packed. When you go to Starbucks, there's a line out the door. So it's this weird economy where you hear a lot of people saying they can't afford anything, but then, especially in the hospitality space, you see things just so busy.
We had 4 restaurants come into town. This is call it a post-pandemic issue. A lot of really good restaurants moved around, from California. I'll just blame California right now, but they moved here, right? And some really cool concepts. But I was like, we look, you have to put your reservation in like weeks in advance
Mm-hmm.
for like a 7 o'clock reservation, weeks. And so you go in there, it's packed. And I'm like, where is all this money coming from? Because these tables are $400, $500, $600 for a table of four every single time, right?
Right. Yeah.
And it just blows my mind.
Yeah.
All these beautiful cars out front. And I'm like, what is happening?
Yeah, and you have to look at the wage info too. I thought this was interesting for ADP. And the wage info that wages have rose 4.4% year over year, which I was surprised about. And it's a positive sign, but it doesn't keep up with the inflation, really.
No, it's just barely keeping up.
Yeah.
And I think that in my little company, we've got 300 people. We have a lot of people applying. I just looked today. This is a really interesting stat. One of the stats that we look at, this was today. We only have one open position longer than 30 days.
Mm-hmm.
So think about that. I keep track of how many positions in 30 days, how quickly we're onboarding people and all that kind of stuff. We have a whole person in charge of employee recruitment and employee onboarding and all that stuff. So we keep track of all that stuff because those are numbers that are important. And it's the lowest we've had in a long, long time.
Well, I remember back in 2021, we couldn't even onboard people fast enough. They would get a different job because it would take a couple weeks to onboard.
Yeah, that's right. That's exactly right. So there's the employers have lots of choices. We put out a job for the executive assistant position. We had 120 applications, like very, very
quickly.
Fast.
Yeah.
Yeah.
So let's look at what is noise and what is actually something to pay attention to, right? And I would say small businesses, dropping their payroll, that's significant because small businesses can't absorb faltering in the economy like a larger company, right? So you have to pay attention to the fact that they are cutting jobs, meaning they are feeling squeezed, because that's going to go up too. That's going to go up to your middle and large size companies.
Yep. I would keep this one on your radar, ADP. Mm-hmm. I mean, it emerged because of the shutdown, but it's something that they put out. I would definitely keep an eye on.
Yeah, and we're not seeing any kind of collapse. It's like these headlines, just like the real estate market and the stock market. We're seeing a softening in jobs. We're not seeing mass layoffs right now.
Right, and I don't think we're going to. Mm-hmm. Again, guys, I'm telling you, I talked about this earlier, but I went to a YPO summit, which is thousands of people from all over the world. And what people are doing is, as people are leaving, there's what we call natural attrition. We're saying, okay, can I absorb this using AI? And can I continue to grow my business without growing my staff? That's always the first thing to look at, and I know people that have full mandates for all of their departments, for accounting, for marketing, for for admin, and all the different divisions that they might have inside of their company. They're saying, you have to use AI and you have to show me how we can do things more efficiently. And so it's not necessarily replacing jobs as much as it's being absorbed, so less people are doing the same amount of work.
Yeah, and what it really means is for interest rates, right? Like if the Fed is starting to focus more on this cooling job market, we can expect, like we saw this week, for interest rates to continue to go down.
Yeah, I hope they do, guys. Listen. We are an advocate of this, but when rates go down, what happens? Bubbles, right? Cheap debt creates, it creates movement, right? Money moves. There's velocity of money. So cars, appliances, electronics, real estate, refinances, those are the things that move, and that money starts to flow, and it trickles over to every single thing you can think of, from the title company to the mortgage company to the realtor, as an example, to the dry cleaner, to all the other things that happen when people are feeling like they're making a little bit. So money moving is a good thing.
And I would keep an eye out on this ADP report, but also the official unemployment numbers come out December 16th. And the consumer spending data was supposed to be released on December 5th, but because of the shutdown, we're not going to get that till January 30th.
Yeah. So I think these next few months are going to be extremely interesting. But if you're a landlord, one of the strategies is do not start jacking rents on your tenants. They have choices. You want to keep them there, right? Keep them happy, keep them there. And if you're cash flowing, do you really need that little bit of extra? Really? Come on. So just renew it at what they're at, if that's market. Or if market's way above, who cares? Keep your tenant. Maintain your stable base. That's what we're trying to look at, And if you're a tenant, on the other side of that, look around. Trust me. Know your numbers. Know your competition, because there are choices out there for you that can help you in the short term.